Good evening and welcome back to Stock Daily. It's 11:15 p.m. Eastern Time on Tuesday, August 5th, 2025. Today, all four major U.S. indices opened higher but closed lower. The rebound we saw earlier met clear selling pressure, especially after hours, where both AMD and supermicrocomputer SMCI delivered earnings that disappointed the market. AMD's results in particular continued their pattern of cautious guidance, and the stock moved lower. We'll go into the earnings details shortly, as well as some near-term watch points. But first, the situation is not as bad as it might seem, and we'll break that down in a moment. Let's start with today's headlines and economic data. President Trump, in an interview with CNBC, said there are currently 4 candidates for the next Federal Reserve chair, including Lawrence Summers and Kevin Hassett. He also indicated he hopes Treasury Secretary Mnuchin will remain in his role. On tariffs, Trump stated that if the European Union fails to meet its investment commitments in the U.S., it will face a 35% tariff. If the investments proceed, the tariff would drop to 15%. He also reiterated that within the next 24 hours, tariffs on India will be sharply increased because India continues to buy Russian oil. On semiconductors, Trump suggested that next week there could be new tariffs announced on semiconductors and chips, as well as potentially lower tariffs on certain pharmaceutical products, though those could rise to as high as 100% to 250% within a year. These comments helped lift some pharmaceutical and health insurance stocks today, reversing some of the recent pessimism in the sector. Now to the data. The ISM non-manufacturing PMI fell unexpectedly to 50.1 in July from 50.8 in June, missing expectations of 51.5, signaling slower economic growth. The prices paid index rose to 69.9 from 67.5, the highest since October 2022. Other sub-indexes slowed. Business activity fell to 52.6 from 54.2. Employment fell to 46.4 from 47.2, the second month in contraction, and new orders dropped to 50.3 from 51.3. Supplier deliveries rose slightly to 51.0, and the inventory index climbed to 44.3 from 42.4. Export orders fell sharply into contraction at 47.0 from 51.1. The June U.S. trade deficit narrowed to $60.2 billion, better than expectations of $61.3 billion, down from May's $71.7 billion. Exports fell by $13.1 billion to $207.3 billion, while imports fell $12.8 billion to $337.5 billion. Imports of pharmaceuticals were hit the hardest, with Chinese imports seeing the steepest decline. China's share of total U.S. imports has fallen from roughly 15% to 7% as of June. Now let's turn to company earnings, starting with Pfizer. Pfizer rose 5.18% after reporting Q2 adjusted EPS of 78 cents, beating expectations of 58 cents. Revenue was $14.7 billion versus $13.61 billion expected. Full-year revenue guidance was maintained, but adjusted EPS guidance was raised to 2.93 cents to $3.03, from 2.83 to 2.93, driven by cost-cutting measures expected to save $4.5 billion by year-end and $7.7 billion by 2027. While the cost savings are notable, revenue growth remains absent, and fundamentals are largely unchanged. Technically, PFE is approaching a strong resistance zone at $24.80 to $26, an area of heavy supply from late 2024 to early 2025. A breakout above this zone would suggest renewed institutional interest, but without revenue growth or major positive catalysts, the stock may struggle to sustain a move higher. For supermicrocomputer, the after-reporting earnings, SMCI fell 10.6% in after-hours trading. Adjusted Q4 EPS came in at 41 cents, missing expectations of 45 cents, and down from 63 cents a year ago. Revenue was $5.81 billion versus $6.1 billion expected, up 8% year over year. Adjusted gross margin disappointed at 9.65%, below the 10% consensus. Management cited a lack of operating capital, limiting production expansion. After a $1 billion financing in February, the company issued $2.31 billion convertible debt in June to address funding needs. Looking ahead, Q1 revenue and EPS guidance are below estimates, but full-year FY 2026 revenue guidance is strong at $33.1 billion versus $21 billion expected, indicating sales will be back-half weighted. Technically, the stock's valuation remains high compared to its historical range. Today's drop may signal profit-taking after a strong run, with initial support in the $47.50 to $49 range and stronger support between $39 to $45.90. If that zone fails, it would indicate skepticism toward the FY 2026 outlook, particularly as we approach mid-2026, when AI and semiconductor growth rates are expected to slow. After hours, AMD fell nearly 7%. Q2 revenue was $7.68 billion, up 3% year-over-year, and above the $7.43 billion consensus. Adjusted EPS was 48, slightly below the 49 estimate and down 30% year-over-year. Gross margin was 43%, in line with guidance but down from 50% a year ago. Net income was $781 million, down 31%. By segment, data center revenue was $3.24 billion, up 10% year-over-year, but down sharply from Q1's 50% growth. Client revenue was $2.499 billion, up 67% year-over-year. Gaming revenue was $1.121 billion, up 73% year-over-year, rebounding from last year's decline. Guidance for Q3 calls for revenue of $8.4 to $9.1 billion, above the $8.37 billion consensus, with gross margin expected to return to around 50%. Notably, the forecast excludes any revenue from MR308 exports to China, as export licenses are still under U.S. government review. If licenses are approved, revenue could exceed guidance. CEO Lisa Su highlighted strong demand for AI products and projected AI chip revenue could eventually reach tens of billions of dollars annually, up from just over $3 billion today, but the timing is uncertain. From a valuation perspective, AMD trades below its peer range when using 20 to 30x forward earnings, suggesting $153 to $160 as a key support zone, with stronger long-term support near 143. Risks include license denial for China exports and potential new U.S. semiconductor tariffs next week. If those risks materialize, a drop toward 120 is possible. On the upside, if Q4 strength materializes as guided, a move back toward $200 to $207 is plausible. For tomorrow, the key question is whether AMD's drop will be bought, narrowing losses toward the $170 level. The reaction may also be influenced by NVIDIA, which showed little movement after hours despite the same macro tariff risks, possibly indicating options-driven flows. That wraps up today's market update. We'll continue tracking these developments tomorrow at the same time.